13th of March. What a day and what a time to be in the markets. We just saw the 16th biggest bank in the US collapse over the weekend, and the reactions of how the governments are going to recover or recoup all these losses that are from the depositors' accounts in the banks. So all of these briefings have come out actually over the weekend, and so we saw a massive spike in not only liquidity but also volatility. The volatility in the markets, everyone was on edge. Everyone was thinking, right, this is one of the first steps that happened in the 2008 financial crisis. So is this the start of a new crisis happening again? So everyone's on edge, market's on edge, very volatile. I'm going to be looking at what happened. So there was no real new fundamental data-wise today, just apart from the weekend massive news releases throughout the weekend. And so we were, like I said, we're adapting to key headlines throughout the day and understanding that with gold, if it is a safe haven, right? So people flock to gold when there is a crisis. If we look at COVID, look at the price of gold going up to 2,000, nearly 2.1 thousand dollars an ounce. And so this is now happening again, where the crisis is potentially happening. You can see gold going up to 1900s today, 1912-ish actually, and same with yen. Yen is also known as a safe haven, flopped during the COVID pandemic. You can see GBPJPY going down to 130s, even 120s during the COVID. Same is happening here, not as low, but prices have plummeted in terms of GBPJPY, and the inverse for gold is skyrocketed, right? And so we're looking at gold here, looking to, I didn't understand that the severity or I didn't want to overestimate the impact that this could have. So I played it safe. I said you can get some buys above 1879, and to continue selling the bias of dollar domination to continue going down. And as you can see, price flew up the rest of the day, and we're where we are now. So for gold, we're just going to quickly go over to our trading view and have a little look. Today was a rough day, as you can see. Minus 1.11%, nearly 12. So let's have a look on our gold chart. We can see our only trade on gold today was here, so about 12:55 my time. Remember, the clocks also went back in America, so the clocks, so the timings for the 4 hours have changed. So in the UK it's 9 AM, 1 PM rather than 10 AM and 2 PM, and also New York starts at 12 PM now at noon, at lunchtime, rather than 1 PM. And NYSE opens at 1:30. So you can see this was during New York session. I was expecting volume when New York opened, which was roughly here. No, sorry, here, if I'm correct. New York opened, and I was looking for sales, right, to continue the bias, but we got a reaction at one of my key levels, which is 1891,400, roughly. We got a reaction here, double top, and I took a sell. We did break below. About 30 pips, then price wants to go back up. I managed correctly, managed perfectly actually. Good, bad trade management, because I understand the short-term bias swap, right? There's a lot of, everyone's on edge, right? Everyone's wanting to protect their money and flocking into safe haven. So this most likely wasn't the best for trades running against a trend. Saved it or played it very well in terms of managing, so I'm happy with that one. Now this is where GJ gets interesting, or where my trades on GJ get interesting. So if we have a little look on, GJ here, exact same fundamentals, nothing really happening. Looking for buys to continue the overall bias. However, as I explained, safe haven currency, right? Sells below 162, I did anticipate if new adapted sells, right? If the bias, or if once the markets reacted, it actually got worse than expected. So you can see we pushed down a lot further down than anticipated. So we were looking for, let's go on a live chart here. We were looking for sales, like I said, below 162, which were here. We got that at 8 o'clock. So London Open flew down. I couldn't trade London Open today. I was busy. Well, actually, and also there was no real intraday range until I was driving. So by this time I couldn't trade anything. So by the time I actually got to the charts and managing, I was looking at New York, and I could see pushes down. New York session opens. We push down with New York volume. A beautiful tap of 161 flat to continue down. These are trades that I should try to get involved in, and I didn't, because I lacked the confidence on a Monday morning, right, or a Monday afternoon. And so you can see on this trade, or this slide, first trade was here. We were looking at sells. All of these are sells, so we are going against with the trend this time. So the first trade was this one here. This was at 1 p.m. So 1 hour after London, New York opened. Apologies. We're taking sells, right? A sell from 700, roughly 800 key level to continue down from 160, right? And I was a little bit too early. Look, we pulled back a tiny bit more to then continue down over 70 pips. So unfortunately, it was a bit of an early entry. I think I did jump in straight once, literally on the hour candle. The hour candle needed a slight pullback, which makes sense in the price range that was in, and continued down. So just an early entry, too excited to get into the markets. Poor emotional management there. And then the rest of the sales were just, managed well, lost and lost, right? So the managed well one was here. Took a sell once we rejected 500. So we pushed up, we got that pullback that I was expecting for the new 4 hour. Right? And also, just to mention, this actually was a 4 hour opening as well. So very poor entry. And then we got a pullback. So this is a new hour over here. 2 p.m. So after NYSE open, got a pullback. And then I was expecting continuation after we got collecting more set orders to continue down and retest the lows at least, right? With the yen strength in the short term. And took a sell at 500. Went up about 20 pips and then stopped at break even. Managed well again. Price didn't want to go down any further. Rejected 300. Fair enough. You could argue you could close once you get a big rejection candle like this with a big wick. Yeah, I agree. Then my last trade idea was on a little bit later on, about 3:46 p.m. UK time, and I took a double sell. So my first entry for the sells were off the basis that we were rejecting 161 300 and 161 200. We had a 15-minute close. If we look here, 15 minutes, you can see we're looking at these candles where my cursor is, rejecting previously created lower high, rejected it with a massive wick on the 15, expecting it to continue lower. This 1 hour 15 was flipping as well to continue to go down, at least retest some of these levels, 0.800 or 1.1600, sorry, 1,600.800 or 160.800, got there in the end. And there was no entries, or there was no validation really. We just took it off the brim of that, anticipating that it would. Then we got the double top that we were looking for, then the entry. Once price failed to break here, we need to close. Got punished for it. So poor trade management. Price just kept on also never breaking. I did see a break in this trend line, and that's why I was like, right, we are potentially swapping back to retest after collecting some more sell orders. This didn't happen, so I need to manage the trade a bit more aggressively there, and got punished for it, and price did continue going up. So overall, a very volatile day. Sorry, I just realized you couldn't see that one. So overall, a very volatile day. We were just looking at this trade here with a trend line right here. We broke the trend line. There's two sells. Down. Overall, very volatile day, like I said, and looking forward to tomorrow where we have CPI. It needs to be on the edge. The market's going to be on the edge. Everyone's going to be waiting for that, because this is what will determine how the Fed will react on their next FOMC meeting. Will they increase interest rates again? Interest rate hike them? Will they not even hike at all and stop? Or will you even reduce? I highly doubt they'll reduce, especially if inflation is very high. It completely depends on how inflation is looking. But just remember, so this just to go over one more time, this entry here was double entry. This is the double top here. First entry aggressive, second entry not as aggressive. Close it once price started reacting here negatively. So overall, be careful, be on edge tomorrow. Reserve your capital until CPI comes out, in my opinion. There may be quick scalps in the market they can get and go for them, but I wouldn't look for any intraday trades until after CPI.